Hello everybody, this is Crypto Amadeo. Welcome to my channel, where we take a fresh perspective looking at the world of assets through both fundamental and technical analysis. And today, I want to share with you a conclusion that I reached recently about Bitcoin and the US equity market. The conclusion is that I think both of these asset classes are likely going to remain bullish until around at least 2030. I think such a conclusion should only be well supported by as many pieces of solid corroborating evidences as possible, which is why I have gathered a list of them here to share with you today. I think we should start by talking about the growing US money supply, which takes me to this chart, the famous M2 chart, published by the Federal Reserve, which is the central bank of the United States. As you can see, going from 1959 to 2021, the total amount of circulating US dollars in the US economy has grown from 280 billion to 20 trillion. That is an increase of about 70 times, that is 70. So the natural question is, where did all this added money supply go over time? Where did it flow to? And if I just go back to my notes, so historically speaking, we know for a fact that the added money supply over time has gone to bonds, equity, real estate, commodities, precious metals, and crypto in the most recent 10 years, which is why you see the prices in terms of USD goes up over time in all of these asset classes. And assuming that the money supply will continue to grow with a similar rate of growth in the future, I think we can safely assume that the newly added money supply in the future will also move into these asset classes. So with that premise established, I think we can move into the more technical analysis part of this video. Let me introduce you to this pattern. This is a very important pattern, very useful pattern called the rising wedge. And what this pattern does is that it depicts a battle between the bulls and the bears in a range over time that is narrowing. And in this case, it's a narrowing triangle going up. So what happens eventually as this pattern plays out is that the price action can either break up north or break down south. And because this is a rising wedge and it's going up, at the end of it, normally it takes way more socioeconomic energy to make it break up north than it does to make it break down south, which is why it's more likely that it's going to break down south. In this example, it broke down south. So let me take you to some real life examples of this. So here is actually Tesla. I think it's the perfect chart to illustrate this because it has kind of the two examples to illustrate both of those cases. And let's start from this, right? As you can see, it's simple enough, right? It's a rising wedge. It reaches this point, bears push it down, bulls push it up, bears push it down, bulls push it up, bears push it down, bulls push it up. Eventually, it broke down, right? So you might ask, at what point is this no longer a rising wedge? How do we definitively know when something is or isn't a rising wedge? So I think the way to determine that is to draw parallel lines. So since this one broke down, it means as soon as, if you draw kind of a parallel line between this to this, as soon as the movement gets out of this right here, as you can see, there's like another breakdown here a little bit. It officially broke the rising wedge. This is no longer a rising wedge as soon as the price action reaches here, or breaks down from here, breaks out of this line. Because if you draw another trend line right here, this space is no longer narrowing, it's getting wider. So this is out of a rising wedge. Same case over here, right? If you look at this rising wedge right here, and if you draw a parallel line between right here and right here, as you can see, it took a lot of socioeconomic energy to push this up north and break out north. You see the increasing volume here, but it did. And because it did, this is no longer a rising wedge. This turns into another bullish thing after that. So those are examples of real life examples of rising wedge and how that plays out normally. And because obviously because Tesla is a very bullish asset, that it had the power to concentrate that much socioeconomic energy to break it out north right here. So so this is Tesla for you. And if we go to another example of this, I can show you is Bitcoin actually. So if you look at this right here, I want to show you a rising wedge that eventually broke out north. I turn this into a daily real quick. So as you can see, that is a rising wedge right there. Let me just draw the lines from here. I'm sorry, from here to here. Normally, if you just do a line chart, you can see it more clearly. Draw a rising wedge right here and connecting this line to this line. As you can see, that was a rising wedge right here, but it took a lot of socioeconomic energy to break it out north here. So that's an indication that there's a chance that this rising wedge is going to eventually break up north. So if I actually because that happened, we need to change the line to connect to here, so that it's a proper trend line. So that's the rising wedge, and let's draw a parallel line here to determine exactly what is needed for you to break it out of that pattern. All right, so if I just put it right here and bring that rightward a little bit more, and then draw the parallel line. So as you can see, really it requires the price action to get to this line in order to break out of the rising wedge, which it actually did. So if I just connect this to this, a little bit, make it more accurate, which it did. And what it did is that it reached that line, it came back down, and it broke it. And from there on, it's just a completely different pattern. So that's another example of a very bullish asset breaking out north of a rising wedge, completely destroying the rising wedge pattern. And that is a Bitcoin example for you. So with this established, I want to take you to a even more important pattern, which is the S&P 500. And if I turn, I want to see a wider range, time range of this chart in order to make more sense out of it. So I'm going to turn the interval, which the interval just means how long of a time period you want each candlestick to be. In this case, each candlestick here is 3 months. So as you can see, that is a huge rising wedge over 90 years, right? This is 1929. This is 2021. So that's 90 years. And actually, if you look more closely, there was a rising wedge here too, connecting 1929 to 1970-ish, 68, 70-ish. And what happened is that it completely broke out north of it and broke the rising wedge right there. But I think we can do the same thing to analyze where is the point. You know, you can keep going north, but where is the point at which it completely turns this thing into a non-rising wedge at all, right? So if we do the same analysis we did earlier and do a parallel line between 1932, starting from 1932, and actually a parallel line works like this better. Okay, so that's a parallel line that parallels the bottom support line going from 1932 to, it touched it in 70s, 80s, touched it again in 2009, and this is the parallel line, the top line that parallels with it, which goes from 1929 to the current time. I guess in order to break that line, you have to get to around assuming the same kind of a slope, right? Obviously, if it just shoots up, it's gonna break it up. It's gonna reach it by like 2022, right? But assuming kind of a same slope as right here, then we're gonna reach it in about probably 2029, 2030-ish, and the value is gonna be around 20K. That puts the S&P 500 index at 20K, which is about 4 to 5 times. So I think if you look at the historically speaking, right, like the United States Federal Reserve is never gonna let this test south again, because that testing south is just gonna mean that it's gonna have to get to 2000 something, which I think is not possible, because assuming the money growth is gonna keep happening to ensure that this doesn't happen, I think it's more likely that we're gonna see it touching this line, and eventually we're gonna the central bank is probably gonna ensure that it's a bullish trend, so it's gonna probably break out of that line a little bit, and then probably consolidate there. But once it breaks out of that line, this is no longer a rising wedge by any standard. So this is a permanent bullish reset. That would be a permanent bullish reset on this chart. You know, completely out of any historical limitations in terms of a rising wedge perspective. So that's S&P 500 for you, 4 to 5 times until around 2030 is what this trend is telling me that it's likely gonna happen. And let's do the same thing to the Dow Jones, right? It's actually Dow Jones. Obviously, you see a rising wedge right here, broke out of it, right? And let's assess where it needs to be in order to completely break out of any kind of rising wedge limitation here. So if you do a parallel line, puts it right around here. Let's make it more accurate. All right, so if that's the parallel line right here, and assuming the same kind of a slope of growth, then by 1930-ish, it's gonna reach around here, which is about 16, 15, 16, or 160. I'm sorry, 160 or 150-ish, 150K-ish of Dow Jones Industrial Average, which is about 4 to 5 times from the current point. Again, that's what's most likely going to happen, according to all the corroborating evidences that I'm seeing right now. So assuming that is the case, then let's come back and talk about the Bitcoin correlation with the US equity market. And as you can see, the Bitcoin is only 10 years right here, right? And I think it's easier always to look at it from just the most simplistic perspective, which is the longest interval you can give it, which is 12 months in my software here. As you can see, obviously this was bullish before 2013, and you come back looking at the S&P 500. Where's 2013? From 2000, hold on, let me see. This is going from the first year of this is 2010 to 2013. It's all bullish, right? And right here from 2010 to 2013, it's pretty much bullish. 2013 popped, right? And 2013 popped, and again 2017 popped. So between 2013 and 2017, it was kind of a pullback a little bit here, right? And if you look at the S&P 500, 13 popped, 17 popped, and it kind of it didn't pull back exactly, but it stayed kind of flat a little bit right here between 13 and 17. And 18, obviously it was bearish, right? And if you go back and look at Bitcoin, starting from 18, bearish. So, but after that, right, this is 20, this is 21. Both years are bullish, which is the same thing over here, 20 and 21. So as you can see, there is a general positive correlation between the S&P 500 and Bitcoin, which is consistent with the fact that the money supply is ever increasing, and the added new money supply continuously just flows, into all these asset classes, including both S&P 500 and Bitcoin. So assuming if we can establish that S&P 500 is going to around here in 2030, then and most likely that money is also going to continue to flow into Bitcoin until that time, before we meet any kind of serious consolidation. So that is the Bitcoin correlation with the S&P 500, with a bigger equity market. And now I wanna provide another corroborating evidence to you in terms of the Bitcoin dominance chart. That is, this is actually the Bitcoin dominance chart. It measures out of the crypto market as a whole, what percentage of value does Bitcoin take up? Like, is Bitcoin 90% or 40% or 70% of the entire pie, right? As you can see from 14, and obviously in 17 it dropped a lot because that was a huge year for altcoins. So if this chart goes down, altcoins goes up, right? This chart goes down, altcoins pop. And all we have to do is flip the chart, make it into a 1 divided by that chart. So it flips it, so we can analyze this chart in a, I like to analyze an uptrend looking chart, right? Which is, theoretically it's the same thing. I can do the same thing here, but it's easier to look at it this way. And so basically what I observe is that when this chart goes down right here, it means the entire market is bearish, where Bitcoins is dropping probably, and altcoins is dropping more to make this chart go down. And when this chart goes up, it means altcoins is growing more than Bitcoin is growing, but both are growing. This is because that is probably the only way that will make this chart go up, because considering that Bitcoin is a much safer choice in terms of crypto investment than all altcoins, the only other case that will make this chart go up is if both are dropping and Bitcoin is dropping way more than altcoin, which is very unlikely to happen. So now you can see this chart is, if I just decrease the interval here a little bit so you can see, what do you see? This is a huge rising wedge right here, and instead of obviously it could, if there's enough socioeconomic energy centered in this market, it can break up upward, but there wasn't. Apparently there wasn't, right? So because it would take too much to get there. So if I draw a channel right here, in order for this to kind of just start going north and break that channel and break that line right there, the parallel line, it would take a ton of socioeconomic energy, which apparently wasn't there. So it broke down, right? It broke down, but what happened is that it didn't just die, right? It formed a falling wedge. This is the opposite of a rising wedge. You see, this is the opposite of a rising wedge. And if I take you to a falling wedge, this is an example of a falling wedge. It's pretty much the opposite of the rising wedge, right? So it just kind of, the fight just forms a narrowing triangle that goes down, and eventually it breaks up north, because at that point it takes less socioeconomic energy to make it break up north than it does to make it break down south. So that is a falling wedge for you, and that's exactly what happened. Bam! It just broke up north. So, and if you just move this, or if I just draw another line right here, you can see that this is no longer a falling wedge. Actually, you could still argue this is, kind of still falling, because it's mildly getting narrower. But look but it's pretty much a channel already that I think it's more likely to continue to go up to completely destroy the falling wedge pattern. And now if you look at this little space right here, what is this for me? I think this is, if I just give it more candlesticks here, so the picture is clear. So you can see that this is forming what's called a bullish pennant. And if I take you to a bullish pennant, this is a bullish pennant pattern, which is which looks like this, you know, depicting a fight between the bulls and the bears, between a narrowing triangle again, but it's not pointing up, but it's pointing kind of horizontally, right, to the east, and it's just pushing down, pushing up, pushing down, and then eventually it gets to a point where one force wins, and normally in this case, the bulls win, right? The bulls win. The previous trend continues. So that is what this is looking like right now, right? I think it might like touch this one more time and come down one more time, and then go north from there. And if this goes north, that means the crypto market is going to go bullish, meaning that altcoins are gonna continue to grow at a pace that is faster than Bitcoin. But the total market wise, it's going bullish. So at least for the next, if I put 22, right? So the problem with this is that this gives you a shorter time, you know, kind of the shorter time frame idea of how long this bullishness is gonna last, because the chart is short, you know. But just from the look of this, I think it can, you know, I can see this continue to go north into like 2022 and even 2023, right? And form a larger, you know, like, I'm just completely speculating at this point, form a larger like rising wedge type of thing going on here, you know. this is a speculation, but the way it's looking right now, it's going that direction. So in summary, here is the list of premises and the evidence that I gathered for you to support my conclusion, my proposition, really, right here, that Bitcoin and US equity market is going to likely to be remain bullish until around at least 2030. So here it is for you. And if you like this video, please click the like button and follow my channel, and I'll talk to you next time.